Shelter inflation no longer the main driver of rising prices, at least for now. The sector was up 0.3% on a month-over-month basis. That's pricing 4.6% from a year ago. It's actually the smallest 12-month increase that we've seen since January of 2022. We want to bring in Andy Walden. He is the Vice President of Research and Analysis at Intercontinental Exchange. Andy, it's great to have you here on Yahoo Finance. So how encouraged should we be by the shelter component of this print?
Yeah, I think it's a good print there, right? And if you look at the broader housing market, the home price indexes that are typically the leading indicator of where that shelter inflation is going, we've seen that same thing throughout the calendar year of 2024. We got up to 6% home price growth early in the year. We were down to 3% by September, a little bit of a bubble here over the last few months, but you are seeing home price growth calm down. And if you look at the full year of 2024, we're 3 to 3.5% home price growth. That's the smallest calendar year growth that we've seen at any point, really, since the market started recovering from the great financial crisis in 2012. So certainly more modest growth overall in the housing market.
What do you think that trend, when you talk about maybe more modest growth in the housing market, that trend looking out to 2025, how do you see that shaping up?
And a lot of that will be dictated by where interest rates go and what that does for demand. But if you look at the baseline as what have we been seeing on a month-over-month basis over the last couple of months and what happens if you project that out, what that says is you'd see another little tick up in terms of home price growth here in December. And as we get into the early stages of 2025, you would see that annual home price growth rate calm back down from kind of where we are down into the 3% range. And so I think that's the baseline expectation. Now, obviously, we'll be watching rates closely. We'll be watching demand and supply closely to see what that could infer for the market. But, kind of a gradual rise through December and then some modest cooling as we move into the early stages of next year.
And if we don't see the Fed lower rates again this year, how problematic is that potentially for housing?
I mean, if you look at kind of what's priced in right now in the futures market for 30-year rates, I think that is the baseline expectation, is that the Fed will be more modest in their interest rate reductions next year. You look at the futures for 30-year mortgage rates, the ICE conforming 30-year rate futures, and kind of convert that price into an interest rate expectation. What that says is we'll likely kind of hover in this same range over the next few months as we get into the early stages of the home buying season, and then some maybe modest improvements as we move towards the middle stages of this year. Now, those rate forecasts are always written in pencil rather than pen, and so expect some movement as we get more information in the doors. But that's the baseline expectation from the market right now, is kind of flat interest rates over the next few months and some modest improvement as we move towards the middle stages of this year.
And when you talk about on a regional basis, what do you see as being the catalyst in terms of some of that outperformance?
Yeah, there's some really interesting dynamics going on from a regional perspective right now. And a lot of it has to do with both affordability, some variations being seen, but certainly from an inventory perspective, you're seeing some noticeable differences across the country. The Midwest and Northeast, we've been talking about these for the last year. That's where you're seeing firmer markets, firmer prices, a lack of inventory, some modest improvement last year, but it would take years to recover at this pace in those markets. And so expectation as we move into the early stages of this year is, for that to be the firmer or the firmer portions of the country. And then you get into the South and Southeast, a quarter of markets nationally have normalized from an inventory perspective. Those are primarily in the Sun Belt region of the country. Your eyes go to Florida, your eyes go to Texas. That's where you're seeing softer prices. And among the minority of markets where you're actually seeing prices ease year over year, those are the areas of the country that you're seeing easing. And if you look at kind of the rate of improvement that we've seen from inventory, those are the markets that could normalize this year, right? A few more in those particular areas. And so certainly some of those regional differentiations that we're seeing in 2024 are expected to continue here as we move into 2025.